Yeah, and this is a nice one to talk to because they are infinitely more flexible than what you used to when you own in South Africa. Why? Because if you make a change to a South African structure, it inevitably has tax consequences. It may have exchange control consequences, and then there are other regulations like empowerment and other considerations to be taken account of. When you've got an offshore ownership structure, you can generally, and you've got to be speaking broadly here, make changes without too much hassle because there's no tax.
Yeah.
If I've got a Guernsey structure and I want my auntie to be included, I can add her as a beneficiary. If I get a new business partner, I can sell part of my holding company. Remember, we said there's often a trust with holding. I can sell part of my holding company with no capital gains tax. So therefore, you can accommodate things like employee capital schemes or ownership schemes offshore without triggering too much of the tax, particularly the tax complexity in South Africa. To me, also, people forget that those schemes are not about tax; also about retention.
Yes,
100%. Very much. Eh?
Much better retention if you're giving guys value offshore, in my experience.
So you're saying that at the moment, what we do is we look at how we can structure that locally, where there is a mechanism which is a lot more tax efficient if you do it globally, offshore.
Yeah.
So it's a mindset change.
Absolutely.
In terms of how we do business and how we contemplate these things.
And that's why you'll hear I've steered away from estate planning. This is ownership structuring.
Yes.
It's broader. And we are able to work from the entity that earns the money, the operating company in South Africa, because many of our clients still have good businesses, right up to the top structure. And that's the concept. We want to get that column properly structured. So yes, you can much more easily accommodate things like bringing in, incentivizing key employees. Empowerment partners, I mean, it's the question nobody asked. Can I have a BEE partner offshore? Well, it would have been a loop.
Yeah.
So no one ever thought of it.
No, it was bad.
Now you say, can my empowerment partner sit offshore? The answer is yes.
It's an entirely new way of doing these transactions.
Absolutely. And again, I believe you're adding more value to those key business partners and shareholding structures by accommodating them offshore. And it's also much easier to get in and out of because there's no tax.
Yeah.
You sell on one day, you buy back on another day, no tax. It's much easier to do. So they're very, very flexible. And remember, at their hearts, trusts are like a prism. You can put as many people that you need to look after into a trust. Get one cash flow in and it can go out without things like donations tax, etc. Very, very flexible because of the no tax. And if we think innovatively about who our businesses and our structures and our investments interact with, I'm almost certain you'll find, other than the cost element, it's much, much easier to structure offshore.
So much education that actually has to happen still around this, because people back down because they feel scared to do it. They feel it's
I think they get
overwhelming.
overwhelmed with the complexity of
it's
the
overwhelming.
It's
and
then they start thinking that there's an illegality around the complexity,
100%.
and they just and they balk. I mean, we've had clients that sort of questioned our Christian ethics because they thought they were doing a whole bunch of illegal stuff here. So. I think it's the public generally just, there's a lot of education.
But it's also quite new. So if this sort of came into effect between 2021, 2023, we don't know about it. It's new. And I don't think there are enough practitioners exploring it as an option.
Well,
so you're obviously quite innovative.
I still do. And we were in Guernsey and Jersey last year. I said, don't lose heart, guys. Because you're thinking the market's saturated and you find South Africans difficult because we moan about the fees. Literally every single day of my life, either me or one of my partners deals with a new client. Now, I'm not saying we get a new client and do a loop every day. That would be beautiful. But we meet somebody who knows nothing or very little about it, and we talk to them about it.
Yeah.
So every day, it's still getting out there. We meet advisors who still don't know. They didn't know. And I'm not picking on them. It's not. But that's how untapped this market is.
Yeah, it is. Yeah. And I think it's kind of what we're trying to do here is we're trying to get this a bit more out there.
Yeah.
But I think it's because it feels so overwhelming. It feels so like there's so many moving parts to it. Like, because we kind of just think this is the way to do it. There's no other way to do it. And
The
I think when
challenge
you
is
start
that-
having that education and that like eye-opening moment, I think that's when, you know,
It's like any sort of anything when you have a very strong legal component, very strong tax component,
100%.
wealth component. I mean, to Andrew's point, you know, their specialist area is structuring. The problem comes is where your local accountant feels they can pony up and build one of these, and they end up transgressing 30 different
100%.
exchange control regulations and whatever else, and then the whole thing ends up in it's a disaster.
Yeah.
And I think that's what creates the perception out there with the world, is that these structures are complex, they're illegal, everyone's going to jail. And I think it's that complete naivety. And it's often fed not even by advisors, but by accounting firms and by sort of BE structuring companies, and because everyone's just in the dark. You know, and I think the few attempts that we've had in building these structures with Andrew, one of the biggest challenges is trying to convince the clients that this is a legitimate, legal
100%.
way of diversifying.
But if I'm in the client's shoes and I'm hearing about this for the first time,
You know, you are going to
you're looking at it
back.
as you're bringing me multiple solutions
Yeah.
to problems I didn't even contemplate, and it almost sounds too good to be true.
That's right.
100%.
You know what I mean?
Yeah.
Where's
So
the
now,
catch?
and we are, as a people in this country, we are cynical
Yeah.
because we have been lied to so many times. So we're not, when you like, so there is this reticence and this resistance because ignorance is a terrible thing. You don't know enough about a thing, so it scares you.
Exactly right.
And even though you come with this massive pedigree and your assurances, and you're giving us the SARB and the SARS documentation, we still in our minds, we can't wrap our heads around this.
Where's the catch?
Yeah.
We
If
are.
it's
We're
too good to
waiting
be
for
true,
it.
it usually is, right? That's
We're
what they
waiting
say.
for it. And I think that's actually how we get around this. It's okay, we also think it's probably too good to be true. But if you go back to when these relaxations came into effect, why they came into effect, that might be the way to sort of understand, explain it.
I think the why
Yeah.
factor. I think if people can just click that factor of, you know, like you were saying, like South Africa needed the money back because everyone was taking money out the country.
Yeah. We have
If you
been.
you have been. I mean, they've been doing it for long, and we need the money back in the country. And this was the method to get the money back into the country. If that clicks, I mean, I know for myself, it's like, okay, that makes a lot more sense than just you're just allowing me to all of a sudden save tax, or you're just allowing me to. No, it's actually their method to get money back into this country, as opposed to you now investing in the UK or wherever else, buying property there.
And also, we are so heavily regulated. We are,
crazy.
specifically in the industries in which we work, we are so used to the red tape. We don't know how to work outside of the red tape.
But that is why, and like our prices are high. Somebody said, you know, I mean, you know what the pricing is, but we don't. And I say this to people who have worked with some of the bigger law firms. I'm not picking on them, but they give you the bundle of documents. I'm trying to build a relationship, so we
As
open
we
the
are.
bank.
We're
Yeah.
exactly the same
Exactly.
ethos. Yeah.
I help you open the bank account. I fight with the bank if they take too long.
Yeah.
When you sign, like I had a guy phone me today and he said he's got some questions about the letter of wish. I said, I'm going to draft it. It's in the pricing. You don't need to send me an email telling me how you'd like to go. I'm going to sort it out. And I'm going to deal with the trustees for you. So they know what's happening, but they don't take the lead. And that takes the complexity out completely.
Exactly.
Yeah.
Because they don't have to read, they must read the documents,
Of
obviously.
course.
But we're doing it step by step. We take it from the report. Okay, here's your share certificate. Now we're going to sign the 42s. We give, many of them don't care, but we give them a memory stick and a file, got everything on them. And then 12 months later, we phone them. If we haven't heard from them, and we say, listen, by the way, you've got to do your report.
Yeah.
Because it's such a good client thing. You know, now we're going to hook in them.
Well, that's the thing. I mean, we do
It's
annual
about-
reviews with clients. I mean, you're doing an annual review with a client.
An annual review. It's a nice way to
It's
put it,
exactly what it's about. And if you think about the structure, you've got your sort of global team, you've got yourself that does all the structuring, and then you've got your local team. And if we're all working together and we're singing on the same hymn sheet, these things are not as scary and as overwhelming. Coming back to the price of things, Andrew, price is what you pay, value is what you get.
100%.
And I think often people get so stuck. It's like people saying, but my investments are, I mean, it's costly, it's expensive. But what are the returns? They almost lose the sight of the fact that the investment's doing sort of 15, 20% a year. And just because it's costing 3%, now we're all we're losing sight of the end goal. Yes, these structures are there's a massive legality. You've got huge amount of IP, so much years of experience, and all your partners. It's a great business you guys offer the public, and it's worthy of a bill.
Yeah.
But that's what you pay when you consider the value that you're getting from estate planning, from a
Yes.
wealth accumulation, from a having
Legacy transfer.
legacy transfer, from alternative residency
De-risking,
program,
as you
de-risking.
spoke about.
There's so much value, not just for this generation, but future generations.
Can't be short-sighted. You
But
cannot look at
that's the
this one with
problem,
short-sighted glasses on.
I think that's another challenge, is that the client is looking at the proposal document and they're looking at that rand value. And then they're thinking, oh, now you've gone into extraordinary detail explaining how you're going to achieve what they want. This is the cost, and oh, it's just too much.
Yeah.
But what they're not seeing is this is what it costs now. But where are you going to be in 2 years, 5 years, 10 years,
20
15 years, 20
Exactly,
years?
Exactly.
So this is really a drop in the ocean.
Yeah.
It really
100%.
is.
And that's the mindset that needs to change.
Yeah.
And it's all around this education.